Hello and welcome to BQ Prime. Today we have with us Mr. Brij Bhushan Agarwal. He is the Vice Chairman and Managing Director of Shyam Metalics, which is India's integrated steel manufacturing unit. They are also one of the largest manufacturer of sponge iron and ferroalloys in the country. Welcome to BQ Prime, Mr. Agarwal.
Thank you.
We all have got to know today about your acquisition of Mittal Steel. So would you like to give more details on this acquisition and how this would take your overall expansion plans further?
Thank you, Vikasji. As you know, I've been always sharing about the uniqueness of Shyam Metallic. Like today, Shyam Metallic is not just one commodity steel company, but we are basically in a very diversified metal space of specialty metals, ferroalloys.
And how this
We
would
make long
take
products, special structures, and we had been always looking ahead, like in the different value chain management, because we believe that for a good sustainability of any good institution or a company, a sustainable values are very important. So if you see, this stainless steel is a uh, very interesting metal, and today with the government penetration on the defense side, make in India, and all the all the prestigious project on the coastal area side, the government is introducing stainless steel because the life of the steel is very good, and we are seeing a lot of export happening from the market of the stainless steel because of the China, geopolitical issue. Our value has a great integration on this. First of all, all the stainless steel raw material is what we are now manufacturing in our plants. The major raw material, the major portion is a ferrochrome, where we manufacture in our Odisha plant. And the other manganese and iron also is one of the products. So this is going to add a lot of value to our organization in the terms of value addition uh, to the existing business and the forward integration. And also in the stainless steel space, we will get into the new era from aluminum to the stainless as well. So which will help us to further enhance and grow the capacity and to learn more about this business. And we would like to learn and penetrate more on the specialty of the stainless steel business.
okay. And what is the size of this deal? What is the kind of investments that you have
The
made for this?
total the total acquisition value is somewhere around 450 crores.
450 crores. And you have also said that you will be spending, your capex will go up to 10,000 crore. So your initial capex of 4,000 crore was for 2 years, out of which you had spent around 2,600 crores. So this 10,000 crore capex will be over what period of time?
This will be in the span of 4 to 5 years. We will share the detailed plan uh, later on. But majorly, the major capex is going to come in our existing organic businesses only as a brownfield project, as we have enough space over there to grow going forward and backward. Like we are setting up a blast furnace, ductile iron facilities, and so many other facilities. We are already doing that. And down the line, blast furnace in the steel making, we are working on the different value chain, which we will be sharing with the stakeholders very soon.
So what would be the purpose of adding a new blast furnace? Like I was talking to someone, they said that as of now you all are not using coking coal for this purpose, which is a good cost saving. So once you start this blast furnace, I am sure that now the requirement for coking coal would also increase.
So on the see from the product side, like I have mentioned that we are as a very diversified company, and there are certain steel which you require to do through the blast furnace route. So we are not looking for anything which is conventional, which can be done by the sponge iron route or from the non-coking coal. We are looking at a different value of steel management. And once we are through with our due diligence and detailed, plans, we'll be sharing the same.
Okay. And
Number
what is the
two, if you
yes,
see, if you see from the carbon requirement,
yeah.
coal besa, cooking coal or coke, it is very, it is not even 10%. So
Yeah.
at the end of the day, also our total revenue, what is going to go in the coal side will be almost more than 80, 85, 90% in comparison to the coke. So we are very much leveraged and balanced on the combination, and as well as the product what we are going to focus through the blast furnace route is something which is going to be a very different product as a whole.
So that product you have already identified, or would you like to share what products you are going to
So
do?
it is still under the, I would say it is still under the process. Would not be very appropriate for us to share all this in this public forum. But once we are
Right.
through with our internal board and our internal resolutions and all, we will definitely like to share that.
So from your statement, we could also make out that you are expanding your capacity, like, for several products,
Very
almost
different
doubling the
product.
capacity. So which are these products that you will be expanding, and which are the factories where these upgradations will or the expansions would happen?
See, if you see from my day one, I have very clearly specified that our major focus will be in the time to come is going to be on the B2C space. And if you see the uh, data, if you see the past numbers and all, our penetration on the B2C market in the long product business was only 70% of our revenue. Whereas that time our revenue was only 6,300 crores approximately at the time of initial IPO. But last year until today, we can say that the revenue this year we will be almost in the tune of around 13 and a half, 14,000 crores, which is hardly not even 2 years. You can see that almost it is getting double, more than double. And from B2C space also, if you see from 14%, our share is going to increase to around more than 40%, 42%. So this is
Okay.
the penetration we are doing. Our focus as a business is going to be on the B2C space to increase our network, to increase our more and more on the B2C value. And number two, we are going to more going ahead on the value chain of value addition on the metal side. So these are the two main focus areas.
Okay, what is the kind of demand growth you see, in the coming years? Because you have done already 3 acquisitions, looking for more. So what is the basis around
See,
which you're doing
we
this?
are we are producing our CAGR of last so many years have been almost in the tune of 25-30%. If you see, we have almost uh, increased the production also more than in the tune of 50% in the long product space as a CAGR. If you see in last 1.5, 2 years, there is no issues of the uh, demand side I see in the long product business, because long product has been a very, very perennial growth in the terms of demand and all. Lot of development activity is happening. And down the year we see 2024 is an election, and with the today dominance of the government on the development side, on the employment side. So this is one area where we see that we don't have to look back. So I'm very, very optimistic. I'm very, very optimistic on the business where we are in, and the kind of cost we are penetrating on the reduction, on the better value realization, on the product development. I'm sure like this is going to be a extremely sustainable and very, very wise business to be.
Yeah. Would there be any kind of plan to look at flat products also going ahead?
Uh, we are not looking at the value of the HR side, because HR is a lot of supply surges we see in the HR side. But yes, on the finish side, we are evaluating, maybe since we have a very strong brand now and in the supply chain management, we might think of coming up with the roofing sheet, color coated business and all. Because we don't have to do any marketing. We have our own customer all set and all. And I see there is a huge supply of HR down the line. A lot of big plants are coming up. So definitely, as on date, not on the HR side, but definitely on the value addition, on the finish side, on the market side, yes, we are evaluating that. But yet to be firm.
So as of now, what we have seen is that your presence is mostly on the eastern side of the country, Odisha, Bengal, northeastern states. With this acquisition, you have come to Madhya Pradesh. But is there some pan-India kind of plan that you have? And also, which are the other global geographies that you would be looking at?
See, we are very strong on the Eastern India, but our presence is almost in the pan India side today, I would say. We are penetrating more and more. And from the acquisition side, as on date, I would not say that we are yes, yes or no, no. It depends on the opportunity. If we see there is any sustainable value coming up, which will add to the organization in the terms of bottom line and a decent IRR and sustainability, we might look into this. But as of now, there is nothing on the plan.
Okay. And recently, government also did away with the export duty on steel. How far it has benefited you? Because there was earlier a refrain that a lot of these markets were taken over by other established players from Europe and Middle East and other places, Far East. So, have you been able to recoup
Yes,
that
we will
loss?
see a lot of advantage because we are very big. We have a capacity of more than 3.6 million ton of pellet today, which is going to be 6 million ton in next 3-4 months. We are already adding, so there is a lot of pellet demands coming up against from the international markets. We'll see again export of the pellet happening. We were also exporting a lot of pellets, sponge iron and other long product as well in the international market. So definitely it is going to help us. So it is definitely a very positive move from the government. And if there is little bit of balance of export and import on the total trade critic, it really helps to reframe and to control the margins and better price.
Which are these places, export markets, new export markets that you would be looking at?
See, we are almost exporting to more than 25 countries. You beat Korea, you beat, Europe, USA, everywhere we are exporting. So these are the countries where, so I would say we are very well established. And in the time to come, uh, all these are countries which are going to be a very, very, export focused country where we have our presence and we have our trust with the customers and the reliability on the material side.
Okay. Couple of questions more. One is this: because of Russia-Ukraine war and the supply side constraints, what has been the impact on the company? And also, have we fully recovered from the impact of COVID now as a company?
See, there has been an impact on the pricing of the carbon prices because we know there has been a disruption of the coal supply from the total system. But now things are getting back to normal. The prices of coal is coming down. The supply is also increasing. And uh, since in next couple of months, the winter session is also going to be over, we'll start seeing a lot of demand coming up from the other part of the country. It is affected, but from the supply side, from the utilization side, from the market side, we didn't see any, great pressure because we had been very, dominant on the local market and 500 kilometers of the radius where we make the manufacturing facilities. So in the time to come, yes, margins are going to improve. And since the coal prices are getting started cooling, we see that things are going to be much more on the positive side.
How much of the international coal prices come down for you from the peak?
I would say in the tune of around 30%. There had been a correction in the tune of 30%.
Since April, May?
Yeah.
Okay. And how much cash and cash equivalent do we have on our book? And as far as our funding options are required, do we look to do it through internal accruals, or we might be looking to come to the
We
market?
have a lot of cash in our books. We are all aware that this is a positive cash, which it's a debt-free company almost. In the time to come, we have a lot of our internal, cash flow in our company, and whatever capex we have taken, we have always planned our capex through a capex allocation policy, and in stages we have done the capex. So majorly all the capex will be done through the internal cash. What I see in down the line 4 to 5 years. And number two, we also need to dilute our equity because today we have more than 88.3% of the equity, and as per the SEBI guideline, we have to bring down to 75%. So I believe like in the time to come through the QIP and the internal cash, we will be able to suffice with our uh, capex.
Do we plan to do something in this year, this financial year?
Not in this financial.
Not in this. Okay. And one final question on the overall outlook for the steel industry and for your company.
See, steel is a very, very important product for our DNA of the development economy. So there is no rocket science, that this product is going to get obsolete or something is going to replace it. For a country to grow, we need a lot of cement, steel, and I'm very bullish. Like we are world's second largest producer of steel today, and all these steel companies are doing well, and there is a lot of spending across the country going on the development side. And in the time to come, I'm very optimistic that the steel is going to remain strong. Might be some kind of a price pressure in this kind of a condition. What we have seen, we never expected, is part and parcel of a business where steel generally has to go with. But long-term view, we are very optimistic, and this is going to remain decent.
And given the current growth, percentage that is being spoken about for Indian GDP, what is the kind of growth we see for steel in percentage?
See, when we see almost 5 to 6% is the normal growth we should expect in the steel, and which we had been always seeing that we had been doing that. In the worst of the time, also when the GDP has gone little down, on the similar proportion, the steel demand has not gone down. Because steel is such a product now, everywhere in the rural area, houses are getting done. So many government schemes, Pradhan Mantri Yojana, roads, national highway, ports, lot of industry, manufacturing activities coming up all around. And steel is one of a very, very, common product where people have to capitalize on. So it is going to be very decent.
Okay. Okay. Thank you very much, sir. Hope to see you again and wish you all the best for your
Thank you,
acquisitions.
Thank you. God bless.